Hey guys, what is going on? How you guys doing? Hope everything is okay. Let me know if you can hear me and see my screen. Okay, I believe everything is okay right now. So just let me know through the chat box and we'll get this party started. My name is Michael Katz. I've been mostly day trading stocks and futures. That means the indices, S&P and the NASDAQ mostly. Great, thanks so much guys. And today, like always, when I'm hosting the trading room, what I usually go is talk about the NASDAQ and the S&P, some of maybe the DAX or the Dow Jones, the VIX, the volatility index. And of course, if you have any questions regarding Forex pairs, please send them through the chat box as well. Feel free. So, like always, we will start with the indices, the US market. Especially in this time of the year, you want to pay attention to the market, the US market. Even if you only trade in Forex, it's important for you to understand the global economical events and basically the way that the price is acting through the indices of the US, because this is the father of all markets, right? The US market. So make sure you follow that as well, even if you're not gonna trade it, just to understand the sentiment of the market. And there are a lot of correlation between the some Forex pairs to the indices, the NASDAQ and the S&P, and small nuances that you can understand when you're analyzing also the US market. So make sure you follow that as well. Besides that, for those of you who are not familiar or didn't hear about it yet, I'm also the CEO of Trade a Pool, and we are a new brand powered by the 5ers, and we are actually funding stock day traders. So if you want to check it out as well, just go to our website tradeapool.com. And also, if you want to trade stocks and just try another asset to trade on besides just Forex, so you can go ahead and check it out through our website. We're giving 14 days free trial, so you can play around with the demo, see how you like it, and if so, join the evaluation program for the stock day traders. This time of the year, we are at the earnings season in the stock market, so a lot of movement and a lot of stocks are gapping up or gapping down 10%, 20%. So the volatility is insane, and you can actually make nice profit from it. So let's look at some charts. Okay, I'm starting with the NQ. The NQ is the future for the symbol, future for the NASDAQ 100. The NASDAQ is the largest, basically the technological, the largest index for the technological companies in the US. There are 100 of them, the biggest one, the largest one. And let's talk about it. We talked about it last week. It was amazing. We said that the market will continue to the upside. It did that. So for those of you who took that trade, it was pretty great. And everything began. I'll zoom out a little bit and talk about it, because for the last 6 months, even a little bit more than that, we're already at 10 months, even, reaching that time. Basically trending in a downtrend channel. As you can see, we perfectly held it few times before as a resistance and also as support. So we're right in the middle, just a little bit above it, trying to reach that line again, that resistance level that acted before that. So we're still kind of in the middle. 2 days, sorry, not 2 days, 2 weeks ago, when the CPI came, the price of the NASDAQ melted down, basically took a lot of stop losses, or actually made a lot of people getting into a short position because they thought that the CPI data was negative and that the price should continue to the downside. And that was a great opportunity for the smart money, institutional banks, portfolio manager, hedge funds, and all of those guys basically took advantage of the situation where a lot of people got into a short position and they bought all their shorts and basically created a short squeeze. Because in the market, if you want to get out of a position, out of a short position, you need to cover that by clicking the mouse key on the buy side. So you're basically buying, and if there are a lot of stop losses that covering those shorts, the price rapidly moved to the upside. And this is exactly what we saw 2 weeks ago. So we had a nice move to the downside. A lot of people thought that the price will continue to the downside, got into their short position, and then it bounced up, took all the liquidity out, active the stop losses, their stop losses, and basically created a move to the upside. So that was a nice short squeeze. And right now I'm on a daily chart. You can see two nice things that worth mentioning. First of all, as I said, we are in that trend line, within that range of that channel. If we're looking at the MACD, the MACD, the MACD is basically an indicator combining 3 moving averages, and it should indicate of weaknesses or weakened momentum, so decrease in the momentum of the sellers or the buyer, depends if we are at the top of the range or at the bottom. So for example, when we reach that level right here after a nice trend to the downside, you can see a small diversion between the MACD and the price. Okay, let me mark that. So you can see that the price created a low and then created a new lower low, but the MACD created a low, but afterwards, instead of continuing to the downside like the price did, it's actually created a new higher low. So it's basically showing us that the negative or the momentum of the sellers are getting weaker. Therefore, the buyers can step in and push the price higher, as we saw it happening right here. So when you're looking at the technicals, at indicators, one of the, at least for my favorite, one of the best one is the MACD. Just look for those diversions between the price, what the price showing you and what the indicator is showing you, and that you will see that it's worked perfectly. Obviously, you don't just buy because you saw a deviation and diversion on the MACD. You need a lot of parameters to make your decision in order to get in any kind of trades. Doesn't matter if you day trading, swing trading, Forex trading, whatever. At the end, it's not going to be based on just one parameter, but this is a great one to use to your advantage. Besides that, you can see the volume here. Now, for those of you who only trade Forex, sorry, in the Forex market, you don't really have a volume, right? But in the stock market or the indices, you will actually see a volume. That means the number of switching hands between the number of shares or contracts switching hands between the buyers and the sellers. So for example, in this case, you can see a nice push of the volume comparing to the others. that stays at the same line, same average, but then the last one that was here, that made a nice push to the upside regarding the volume. So in this case, it's also representing bottoming, showing you that the price had a lot of liquidity in that area. And this is a great place where a lot of participants changed and from one side to the other. Right, so those two parameters are nice to have. Besides that, you can see if we also still looking at the MACD, but obviously we can look at the charts and the prices as well. Look what happened, or where the price of the MACD, where the price was when we shifting from buyers to seller moment. For example, right here, when we were down here before the bounce up, the price was at around the points were a little bit more than 400, right? Here at the bottom, same, about 400. Sorry, a little bit more, 500, 550. At the top, when we started to drop, the MACD was right here around the 400, right? So right now we just basically started the move. We didn't even reach the zero line, and we're already pushing higher, but I don't see a main reason why we shouldn't continue to the upside just by looking at the MACD, because we are only reaching the zero line. In most cases, the change, the change of the direction will come at the top ranges of the 200 or 400 points in the MACD, and not just in the middle of the range most of the time. Again, this is not something that you wanna click on your mouse key just because you just understood that. You obviously need a lot of work to do to really understand that the market is heading to the upside, and then where you buy, where your stop losses, etc. But this is also kind of aha moment when you can tell yourself, okay, I have a nice diversion at the bottom. We reached a major support level, high volume coming in. The MACD is moving, already pushing higher, but didn't even reach the zero line. So we might have more room for the upside. So now when I'm zooming in, it could be a nice, if we're looking at patterns, it could be a nice head and shoulder patterns, right? We have the reverse head and shoulder. We have the shoulder right here, the left shoulder here. Then we made a nice head, and might be that we will push to the downside to create a new shoulder and then push to the upside again. So this is like an overview when we're looking at a pattern that might form here on the daily chart. Now dropping down to the 4H, we will get a little bit more information. That was the CPI moment when a lot of people took short, and then the price pushed higher and short squeezed them. Enrique, as I mentioned, short squeezing is basically a time where a lot of people are in a short position, and when the price goes against them, it pushes them to get out of the trade. And in order to get out of a short position, you need to buy. It's not like, let's say, in Forex, when you're trading on an edge account and not netting. Okay, so in stocks and in indices, it's basically trading on a netting account. You're averaging the price. You need to close the position. You can't really get short and buy, short and long on the same asset. You need to close your short with a buy order, and then only get to a long position if you like to. So in this case, you can see it We had a nice short squeeze here. Right now we are trading inside of a resistance level, a nice resistance area, still holding it. Also you can see a nice channel that we traded inside of it, broke through it, resisted, then again another resistance, and dropping a little bit lower than that. I do believe that if we'll break through this around 11,700 area, then we can see a much stronger move to the upside, maybe even 300 points around the 12,000 on the NASDAQ. But yet again, if we are want to see the head and shoulder pattern, we might see now a drop at the price reaching those levels, and from that looking to buy the dip on the NASDAQ, basically looking to get into a position, a long position, when the price will drop and reach those certain levels. We talked about it last week as well, and it paid off perfectly. Every time the price dropped in the market, major buyers came, pushed the price higher, again dropping down, making a new low, pushing the price higher too. So basically we are still in a mode of buying the dip on the NASDAQ and also on the S&P. We will look at it in a second. Of course, when we look into buy the dip, before the buying, there will be a dip. So I can expect a move to the downside. You can trade on it, that's fine. Or you can wait until it will reach a major support level and then look to buy the bottom in. So that looks pretty good, again, to the upside generally speaking, but maybe a push to the downside today, tomorrow, just so we can go higher. Also, when you're analyzing the charts, you definitely can use the waves, like the rallies, just to check them and analyze them. So for example, let's take this, comparing the rallies and understand the momentum of them. So for example, look at those triangles, rectangles that I just marked. So you can see that the first rally was pretty strong to the upside, nice momentum, volume coming in. The second one was a little bit longer than the first one. They made the same move, like the same move in the price, but at the end it was a little bit longer, more candles in that rally. And also you can see some red candles coming in and not as much stronger than it was before. Then we had another rally, the last one, and you can see that the price is much slower, moving much slower. Again, made pretty much the same movement, but took it a little bit more time, almost at least 1.5 more time. And then you have red candles inside as well, showing you that the price getting weaker than what we saw on the first rally, for example. So in this case, those elements, small nuances, can tell you that the price might push down, go to the next level of support, and then try to buy the dip over there and pushing the price higher, crossing that 11,700 all the way to the 12,000. Let me see what you write in. New to your analysis, but why wouldn't we look for shorts on resistance? Autumn, you can definitely look for a short on the resistance. Definitely do that. Yeah, no doubt about it. I'm giving you like a overview. First of all, we went to the daily chart just to understand, at least in my opinion. Obviously, I might be wrong. Sometimes it happens, obviously. But in my opinion, the market looks pretty good to the upside in a bigger picture look. But when you zooming in, we are definitely at a resistance level, and it looks pretty good to push today, maybe tomorrow, give it a little bit more to the downside just to reach those support level, and from that point buy them. So you can go short on the resistance level. Yeah, you can definitely do that. At least the way I'm acting it is just waiting for those support level, because I know that the success rate and also the risk reward will be in my favor. But you can play the resistance as well. Yeah. It's not the stochastic, it's the MACD. It's 9. It's basically the default for the MACD. It's 12, 26, and 9. So let's go to the S&P. Looks pretty much the same. So we're looking at the S&P 500, the largest 500 companies in the US. And you can see it's also in a channel, right? The same way as the NASDAQ was, or still. The CPI moment when the price dropped down majorly, put everything in, put all shorts in, then squeeze them out, pushing higher. Right now, you know, the S&P is a little bit stronger even than the NASDAQ, because it's already broke the first level, broke through the first resistance level, so it's a little bit above it. So what I can expect from the S&P is basically to drop down a little bit to those levels, maybe a tiny bit below it, and then again try to buy the dips around the levels, around this area, and push the price up, maybe even for all the way to the 4,000. Okay, now remember guys, we talked about it again a week ago when we had the trading session together. I'll also add into my analysis the VX. The VX is the volatility index of the Chicago options. So a lot of people, basically the S&P and the VIX goes the opposite. Okay, so the price of the S&P goes up, the VIX going down, and the opposite. A lot of people call it the fear index. So when traders believe that the price of the S&P will go down, the volatility in the Chicago options, the put options, increasing, pushing the VIX higher. And what you can do after you're done analyzing, let's say, the S&P, you go to the VIX and want to see the right correlation or the right analysis also on the VIX itself. So I'm on the 4H chart, and if we just mention that the price in the S&P might drop maybe today or tomorrow, then we can see that the price in the VIX right now is kind of reaching those areas of support, right? So it makes sense that the price might push a little bit higher on the VIX. That means, pushing a little bit down to reach those stop losses. That means that the price of the S&P can push the opposite direction as well. So if the price of the VIX going up, S&P down, and the opposite. So those elements can work to our favor, and when you mix all those together, you get a better picture. Obviously, it's still not drilling down and entering a trade, right? Because when you enter in a trade, you want to know where your stop losses are, what is the risk that you take in, how you wanna manage the trade, and when you wanna take some profits, and so on and so on. So in this case, it's just a big picture analysis, and then you drill down to the 5-minute chart or the 15 or the 1-minute chart, depends on what you like to trade. Another chart that you can analyze, it's the Dow Jones, very similar to what we saw on the S&P and the NASDAQ, a little bit more stronger. You can see that it's already, that was the CPI, so you can see that it's already broke through this level of resistance. Then another one here broke through it, continued to the upside and broke through that as well. So it looks pretty good. The Dow Jones looks pretty good to the upside, generally speaking, reaching those areas of the 32,600. I guess that will be a nice place to start looking for short positions. Okay, so if you guys have any any Forex pairs you want to check out and talk about, let me know. Besides that, again, for those of you who want to try some stock trading, check us out at tradeapool.com. We're giving a 14 days free trial, so you can play with the system, the trading platform. So obviously it's a bit different than what you already know from Forex, but we got everything covered. We have PDFs that explain it, an ebook there, videos that explain the differences and the terminology you need to understand, and you can play 14 days with the trading platform. So yeah. Okay, USD yen is right here. I mean, that was a crazy sell-off, huh? The USD on Friday, the USD yen on Friday. That was, yeah, it was crazy move. So let's look at it. Right, so at the moment, obviously, we reached that support level around the 147 area. I would definitely add the MACD here just to see if we have a diversion, because you will see, I believe we do, you will see it in a second. Let's see if we got it. Okay, interesting. Not yet, not a complete one. Maybe we need to play with the parameters just a little bit. So we reached that support level. Let me see another look. So what I'm basically looking for is a few things. First, again, I want to see if there is any decrease in the momentum of the sellers. The other thing is I want to see if there is any major levels below it that might attract the price to it. So obviously there is one right here, the area before we broke through that, and the support we got from those close and the open candles, the major ones. In a quick look, I would see the price continue to the downside. We might push just a little bit higher to take the resistance area right here around the 147.50, 60, and then from that point look for the downside. Yeah, look pretty good, still looking pretty good to the downside, to be honest. Maybe one more push reaching those 146, 145.70, and then try to reverse from there. Just make sure when you, and I told you that before, when you enter in a trade, and it doesn't matter, no, it doesn't matter, but in most cases, let's say, when you enter in a trade, don't go full in, don't go all 100% risk of your account, daily loss, or whatever you're using. When you do that, when you enter in with a full position already in one take, you're not giving yourself enough room to play or manage the trade basically. And if there is anything that we as traders have to our advantage, is that we can manage the trade. We can actually work with it and take liquidity out and add more, and basically play with it in order to get to that point when we are in profit and we can take some of them out. So if I can give a really good one advice, especially for those of you who just started, don't go all in. Always take some of the position, X amount of the risk that you want to take. Let it feel the trade, yeah. See that you're going to the right direction. If not, you can add more when it goes against you, but still in the parameters of the risk that you are willing to take. And that way you will be able to get more out of the trade and understand a little bit better price action when it comes to, especially if you're trading on a 1 minute chart live. And again, it doesn't matter if it's Forex, stocks, or whatever. Okay, regarding trader pool, the Qs, the QQQ is the ETF for the NASDAQ. So instead of trading the NQ as I showed you, you can trade the QQQ. That's the normal. Basically the ETF for the QQQ. The TQQQ is what it's called Ultra Pro ETF. So it's basically 2 times of a movement. So instead of every cent that the QQQ does, that the TQQQ will move by 2 cents. And the SQQQ is also a pro share, and that is the opposite to the QQQ. So when the QQQ is dropping down, the SQQQ is going up, also a double. Okay. Yusuf, regarding the volume, very interesting. The volume is also very interesting in Forex, but since Forex is it's a closed system, you're not getting, let's say there are hundreds of brokers worldwide, right? You're not getting the full information from everyone else. So when you trade in Forex, you're trading with the broker that you're trading with. So you only get the volume. You can do that and it's good, but you only get the volume from the place you are trading with. Whereas in stocks, I'm getting the volume not with my broker, I'm getting the volume from all the exchanges. So I hope it makes sense. So there is a volume you can add. You can go to the MetaTrader and add the volume, but you're only getting it from the specific broker that you're working with. That's the main difference. Okay, let's see, pound dollar. On what time frame are you looking at, Jay? On the dollar? Yeah. Oh, sorry. On the Shalil. On the pound dollar. look at the daily chart for a second. Yeah, made a nice bottom in after the drop that we had a month ago, a few weeks ago. I guess in a general speaking, we still got place to go higher. Yeah, so we got enough room to go higher to the 117.40 till we will reach those resistance levels. But let's look at it on a smaller time frame, see if we can find anything. You know what, it's kind of in the middle. I don't have a lot to say about it. Usually what I'm looking for is extended move to short or extended move to the downside to buy. In this case, we in that trend, we already developed that nice positive trend, uptrend. So in this case, I don't have a lot of information or anything that I can use. Maybe if you're trading like a smaller time frame, like a 5-minute chart, stuff like that, then you have a little bit more to work with. You can use this trend line, test it, see if we are holding, see if it still holds this area right here. So for example, if you want to aim for the long side, right, if you want to buy, so then you can buy if we retest in this trend line. Again, not a full position, then let it play around those areas, add a little bit more while reaching those support levels, and then place your stop loss a little bit lower than that. It will play here, and hopefully if it's gonna go up, it probably won't go to the downside. Take your stop loss, just push furthermore, and then you will have the full position from the button. So basically your average price will be probably around the 115.50, and then when it will shoot up, you will take your partial out around the resistance level, and then let it ride and try to reach the resistance area here, break through the high. So this is something that I could have played, but on a higher time frame, like a daily or daily, it looks good to the upside. But on a 1H, I don't see a specific trade that I can join, since it's already made some waves to the upside. Sorry. Alrighty, guys. So let's call it today. The US market already started to move, and again, check us out at tradeapool.com, and I will see you next time. Until then, have a great trading session. We'll be in touch. Bye.